Hi, it's the 30th of June and welcome to today's tax update. Our tax update for this month will focus on local and international developments of June 2020. Let's have a closer look at these developments. An amending income tax law was published this month, which relates to the provisions of the notional interest deduction, the NID. As a reminder, the NID is a notional interest tax deductible expense that arises upon the introduction of new equity employed in the production of taxable income by Cyprus company or an overseas company with a Cyprus permanent establishment. The deduction is equal to the amount of new equity multiplied by the relevant reference rate and is subject to an annual cap of 80% of the taxable profits arising from the new equity. The new law introduces the following amendments. As from 1 January 2020, the premium on the reference rate is increased from 3% to 5%, and the Cyprus minimum reference rate is abolished. Where the country in which the new equity is employed does not have an issued 10-year government bond, as at 31 of December of the relevant year, the reference rate is the Cyprus 10-year government bond yield plus 5%. As from 1 January 2021, new capital created from reserves up to 31 of December 2014 will no longer qualify for the NID. The amending law also clarifies that for the purpose of calculating the 80% NID cap, the relevant taxable profits are those arising from the employment of the new equity, so that the NID can only be claimed against such profits. It is also clarified that the cap applies separately to the taxable profits derived from each business asset that is financed by the new equity. This applies retrospectively as from 1 January 2015. More details can be found in our specific tax alert on our Tax Alert website. This month, Parliament has also voted into law the second phase of the provisions of the EU Anti-Tax Avoidance Directive, also known as ATAD 1, as well as the provisions of ATAD 2. The amendments are in the income tax law and introduce exit taxation and rules on hybrid and reverse hybrid mismatches. The effective date of these provisions is the 1st of January 2020, excluding the rules on reverse hybrids, which apply from the 1st of January 2022. More details will be covered in our next webcast. A decree was published this month which extends the deadline for the submission of the 2019 personal income tax returns and for the payment of the relevant tax due. The deadlines are extended to 30th of October 2020 for the electronic submission of income tax returns of employees and pensioners whose gross income exceeds 19,500 and self-employed individuals with turnover that does not exceed 70,000 euros and who do not have the obligation to prepare audited financial statements. With respect to the amending income tax law, which provides tax incentives to landlords to voluntarily reduce the rent amounts charged in 2020, this has been published in the Official Gazette on the 2nd of June, followed by a circular issued on the 3rd of June. The circular, amongst others, clarifies that the incentive also applies to income arising from a leased property or from a right of use of a property. Moving on to some international developments, on the 3rd of June 2020, the EU member states reached agreement on an optional 6-month delay to the first reporting deadline under Tax 6, as well as a delay to the exchange of information by the tax authorities until the beginning of 2021. As a quick reminder, Tax 6 requires intermediaries or relevant taxpayers to provide information on reportable cross-border transactions to the appropriate tax authorities. The tax authorities in turn must exchange information with their European counterparts through an EU portal. Since the proposed delay would be optional, this development may result in EU member states having different reporting deadlines for tax 6 at a potential source of complexity and difficulty for cross-border EU businesses. We understand that the Cyprus Ministry of Finance is considering adopting this extended deadline. We will close off today's tax update with a brief reminder of the deadlines coming up. Today is the new deadline for the electronic submission of income tax returns for companies and individuals preparing audited financial statements for the tax year 2018. And today is also the deadline for the payment of the SDC on rents, dividends, and interest from sources outside of the Republic for the first 6 months of 2020. Moving on to 31st of July, this is the deadline for the electronic submission of the 2019 employer's return and also the deadline for the submission of the 2020 provisional tax return and payment of the first installment of the provisional tax. This concludes our tax update for this month. Thank you for watching.